Hi, and welcome. You're listening to the X22 Report. My name is Dave, and this is episode 1598, and today's date is June 12th, 2018, and the title of the episode is The U.S. is One Step Closer to Bankruptcy. Let's get into the economic collapse financial news. Now, we understand that the UK had a BREXIT vote, and the people wanted to basically detach themselves from the EU. And the central bankers, well, they don't want this to happen, and they've been fighting as hard as they possibly can. The elite, the central banks, they don't want this to happen. And it looks like the UK Prime Minister, Theresa May, might have won a watered-down vote that leaves her cabinet in control of the Brexit negotiations for now. But in order to avert mutiny, she had to accept a considerable concession. Now, the UK government wins by 324 versus 298 in the key Brexit amendment. Now, government will use 5A and 5B, but not 5C, of the Grieve Amendment as basis for a discussion on meaningful vote. The Grieve Amendment is a slightly watered-down version of the original Meaningful Vote Amendment. The House of Commons will be able to direct Brexit negotiations if there's no deal by the end of November. And lawmakers will have a veto on how it goes from there. The government has made big concessions towards the Tory rebels lobbying for a softer Brexit. This puts a huge amount of pressure on May's cabinet to sort itself out and conclude a deal. With the October EU summit now looking like a big crunch date, Brexit returns to Parliament. It is likely to adopt a softer approach. And again, the central bankers, the elite, they're pushing back. They don't want this to happen, and they're trying to stop it at every turn. And we'll have to see how this whole thing plays out. And we can see that this has been a difficult road, and the people still want the Brexit. We know that the elite, the central bankers, they told us how this was going to fail. They told us how the economy was going to implode. They told us so many different things if this went through, and it didn't go through, and we saw nothing of what they said. And now they're saying, well, if the Brexit actually happens, we're going to see shortages. We're going to see this. We're going to see that. Again, this has nothing to do with the Brexit. This has to do with the economy imploding. And eventually what's going to happen is the economy will implode. And if this goes through, guess what? Other countries are going to look at this and say, we don't want to be part of this either. Actually, Italy is looking at this right now. They're already taking the approach that maybe we should be separate and apart from the EU. So it's already starting to spread, and we're going to see other countries step up and say the same exact thing. Here in the United States, we're starting to see inflation. Consumer prices are surging. And let me just say this. We've been seeing inflation. Basically, the central banks, the Fed, have been pushing inflation out into housing, into the student loan market, into other countries, into health insurance, health coverage, into many other things, the stock market. So we don't see it on a everyday usage of food, supplies, and things that we need every day. But we do see it. We do see prices increasing on many of these things. And for the 32nd consecutive month, the consensus estimate on the street was 0.2% increase month on month. And expectations were met, pushing the headline CPI to 2.8% year on year, the highest since December of 2011. The core CPI also rose to 2.1%. This is the highest since 2017 of January. The indexes for new vehicles, education and communication, tobacco increased in May. The index for all items less food and energy rose by 2.2% over the last 12 months, after increasing 2.1% in the 12 months ending March and April. We also see the medical care index rose by 2.4%. Shelter index rose by 3.5% over the last 12 months. Real wage growth is slumping. So as real wage growth is slumping, we're seeing inflation in all these different areas. So this tells us it's going to become more and more difficult as we move forward. And we're going to see a lot more inflation because everything's starting to break down. And we're seeing it across the board here. We're seeing it in every economic sector. We see it in the automobile sector. Now, auto lenders, they are becoming very, very nervous because they went to those people who had good credit, those people who have subpar credit, those people who have subprime credit, and they're running out of people to lend money to. And what they're doing right now is they're taking anyone. And to get anyone in, they're extending the loan terms, they're reducing their standards, they're doing whatever they possibly can to push sales. Because right now, the automobile industry is hurting. And what we're seeing right now is that delinquencies, they are rising because what are they doing? They're giving loans to those people who really can't afford it, who can't make payments, and they're trying to bring these people in any way they possibly can. But eventually what happens is they are delinquent on the loans, and many times they default. Now, in the first quarter, the average loan term for a new car exceeded 69 months. The second consecutive quarter it had ever been above that level, according to Experian. Also in the first quarter, new car loans originated with repayment periods of between 73 and 84 months, represented more than a third of total new car loans, up from 7% of loans in late 2009. And what we're seeing here is they're trying to do whatever they can to lend money because that's the business they're in, and they need car sales. And they can see that it's becoming more and more difficult. And basically, eventually what's going to happen, you're just going to run out of people. Because what's going to happen with all these people taking these loans, we're going to see delinquencies rise. We're going to see defaults rise. And we're going to be heading into a major, major problem. And what is that major problem? Well, it's going to be a bankrupt country. I mean, we're heading in that direction. We're one step closer. I mean, listen to what has come out from the Treasury. Now, according to the latest monthly Treasury statement, in May, the U.S. collected $217 billion in receipts, consisting of $93 billion in individual income tax, $103 billion in Social Security and payroll tax, $3 billion in corporate tax, $18 billion in other taxes and duties, a drop of 9.7% from the $240 billion collected last March, and a clear reversal from the recent increasing trend. Even as the federal spending surged, rising 10.7% from $328 billion last March to $363 billion last month. Where was the money spent? Well, it was spent on Social Security, $83 billion, Defense, $56 billion, Medicare, $53 billion, interest on the debt, $32 billion, and other, $141 billion. The surge in spending led to a May budget deficit of $146 billion, above the consensus estimate of $144 billion, a swing from a surplus of $214 billion in April, and far larger than the deficit of $88 billion recorded in May of 2017. This was the biggest March budget deficit since the financial crisis. Meanwhile, as rates blow out, the U.S. debt is expected to keep rising and somehow hit $30 trillion by 2028. So what do we see happening here? Well, the U.S. is continually spending, tax receipts are dropping, and this is a recipe for disaster. We are one step closer to bankruptcy. This is the whole point of this. They're going to continue this. Why? Because they need to crash the current system. Who are they? Trump and the Patriots. Because we are not in a people system. I said this over and over and over. We are in a central banking system. We can't repair a central banking system. It doesn't work that way. The central banking system is designed to fail because they keep loaning the government money and it's attached with interest. There's not enough to pay this back. And with the people losing jobs left and right and getting lower paying jobs, guess what? You don't have the tax receipts coming in. We're going to see this trend continue. Why do you think the United States enacted the FATCA-GATCA laws, where they can go across the globe and find whatever funds they can possibly find and bring them back here and tax those people who are working outside the United States? Because they needed a way to bring in more tax receipts. That was the whole purpose. The whole system is designed to fail. And the only way to get out of this is to crash it and to blame it on the central banks and say, you know something, we are not going to restart this. We don't need the central banks. Look what you've done to Argentina. Look what you've done to Greece. Look what you've done to Cyprus. Look what you've done to Spain, Italy, and the rest of the countries. Look what you've done here. You've put every single country into debt. And these countries are barely making ends meet, and they continually push austerity on the people. That's what the central bank does. And then they rob these countries of their assets. So what's wrong with the economy? Well, Charles Hugh Smith lays it out for us. 1. The financialization of the economy, which transforms services, credit risk, and labor into commodities that could be traded globally. Financialization generates enormously asymmetric returns. Those with access to low-cost credit, global markets, and expertise in finance collect the lion's share of gains in income and wealth. 2, the technological transformation of the economy, which has placed a substantial scarcity premium on specific tech, managerial communication skills, and devalued ordinary labor and capital. As a result, the majority of gains in wealth and income flow to those with the scarce skills and forms of capital, leaving little for the ordinary labor and capital. 3, globalization, which transformed the developing world into the environmental dumping ground of the wealthy nations and enabled the owners of capital to offshore waste and labor. 4, the destructive consequences of growth at any cost are piling up. Growth is the one constant of all existing political economic systems, and none of the current modes of production, which is organized production, consumption, the economy, and society, recognize that growth is not sustainable. 5, the dominance of debt-funded speculation as the means of getting ahead, as opposed to producing products and services of intrinsic value that serve the core needs of communities. 6, the economy's gains in income and wealth are concentrated in the very top of wealth power pyramid. The top 5%, entrepreneurs, professionals, technocrats, and within this class, most of these gains go to the top 0.1%, the existing owners of wealth and financiers, speculators with access to cheap credit. These individuals make out. They understand they have the insider information, they have cheap credit, and they're the ones who become very, very wealthy. And we see this in the housing market. The gains in housing are concentrated in specific markets. Outside these hot markets, gains are modest. Think about Case-Shiller when they look at the 20 different cities where they see the bubbles blowing up and hedge funds, investment companies come in. They buy all these homes. They're told to hold on to them. They use cheap credit. And basically, they drive the prices up. Banks are told not to foreclose on houses, keep them off the market to drive prices up. Asset bubbles eventually pop, leaving those still owning the assets with losses. The risks are thus intrinsic and high. The average investor gambler lacks the experience needed to recognize the bubble, has stopped expanding and exit the market before the other speculators rush for the exits. This is what we've seen in the past. Actually, this is what we're seeing right now. All of these wealthy individuals that have pumped these bubbles up, they are exiting, and those who think that these bubbles are going to continue, they're coming into the market. This is why you see speculators in the real estate market. This is why you see more retailers in the stock market, and they're just rushing in, and they're going to take the fall. 7, the devaluation of ordinary labor and capital means the bottom 60% of the economy that lacks the requisite skills with scarcity premium in the emerging economy have lost easy access to the ladder of social mobility. 8, the concentration of wealth and power in the hands of the self-serving few corrupts the economy and democracy. The U.S. economy is dominated by insider and elite rackets, skims, scams, cartels, quasi-monopolies, all of which corrupt the economy by creating perversive incentives for exploitation and gaming the system to benefit the few at the expense of the many. This corruption in service of maximizing private personal gains at the expense of the system itself also corrupts the mechanisms of governance, which are now little more than cloaking devices that protect insiders and elites from scrutiny and consequences. The 20% above the bottom 60% may appear to have some access to social economic mobility, but this is largely an artifact of the bubble economy since 2009. Once the bubble deflates, the illusion of social mobility for the middle class between the bottom 60% and the upper 20% completely vanishes. And how is all this created? It is created by the central bank. The central bank that creates the currency out of thin air, that loans it to the government, that pays off those on Wall Street, gives them easy credit, gives them insider information, pays off certain government officials, and also these government officials are paid off by other interest groups, other countries. It corrupts the system completely. And we end up with the very wealthy and the poor and the middle class. Well, they don't exist at all. So what we're seeing a complete and utter breakdown of the entire economic system. This is what happens in a central bank economy. And if you look back in time and you look at the UK, you look at Spain, and you look at the rest throughout history, you can see it's the same exact pattern over and over, where the people are pushed to the edge and eventually the people can't take it anymore and they fight back. This is why we see revolutions. This is why we see kings having their heads cut off. This is why we see all of this, because they drive the people into a no-win situation. And the people at this point say, you know something? Well, we have nothing. We have nothing to lose. It's time to change everything. That is what we are seeing today. So the people are going to push this system and push it hard until it doesn't exist anymore. And then we're going to enter a transition. This is what we're seeing right now. And we're going to enter this transition, and hopefully the people take control and make it a people system, not a central bank system. So no matter what, we're going through a transition, and like I said before, whoever has the narrative is going to win. Listen, everyone, thanks a lot for listening. Be well, be safe, and especially be prepared. Thanks a lot.